DeFi, RWAs, and stablecoin yield. How U.S. and emerging markets shape global capital flows. Introduction. The global financial landscape is experiencing a transformative shift, largely driven by the rise of decentralized finance, DeFi, real-world asset, RWA, tokenization, and the widespread use of USD-denominated stablecoins. While the U.S. has long dominated global financial markets, emerging markets and DeFi ecosystems are increasingly competing for capital, all in the pursuit of higher and more stable yields. This analysis explores how DeFi, RWAs, and stablecoins are reshaping capital flows and the role of U.S. and emerging market regulation in directing the future of global liquidity. 1. U.S. dominance in global financial markets. The U.S. holds a significant share of the global equity market, accounting for 42.5% of total global market capitalization, valued at $46.2 trillion as of 2023. Historically, the stability, depth, and liquidity of U.S. financial markets have made it the prime destination for global capital. U.S. stocks, especially those in the S&P 500, have delivered consistent returns, significantly outperforming other global equity markets. For example, an investment of $100 in the S&P 500 in 1990 would have grown to around $2,000 by 2023. The rise in U.S. interest rates, driven by the Federal Reserve, has further cemented the U.S. as a hub for yield-chasing investors. Recent increases in Fed fund rates, which peaked above 5%, shifted substantial capital into U.S. yield-bearing assets, such as treasuries, tokenized money market funds like BlackRock's BUIDL, pronounced BIDL, and other stable yield-driven investments. As a result, DeFi and other global markets have seen a relative outflow of liquidity as investors seek higher returns in the U.S. 2. DeFi and USD stablecoins as global financial bridges. Despite the U.S. dominance, DeFi ecosystems have been rapidly growing, offering global access to financial services without intermediaries. A key enabler of this growth is the widespread use of USD-denominated stablecoins like USDT, Tether, and USDC, USD Coin. These stablecoins act as a bridge between the traditional finance, TradFi, world and the decentralized financial markets, allowing capital to flow seamlessly across borders. Interestingly, while these stablecoins are denominated in USD, much of the liquidity originates outside the U.S. through Eurodollar markets, USD deposits held in foreign banks. Stablecoins facilitate global participation in DeFi by providing access to USD liquidity outside the U.S. banking system. This enables participants to bypass U.S. regulatory oversight while still benefiting from the stability of the dollar. Moreover, the issuers of stablecoins like Tether often invest the reserves backing these tokens in yield-generating assets, such as short-term U.S. treasuries. This practice creates a complex financial loop where capital held outside the U.S. flows back into U.S. assets in search of yield, while remaining accessible globally through DeFi protocols. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 3. Tokenization of real-world assets, RWAs. The tokenization of real-world assets, RWAs, represents a further evolution in global capital markets. RWAs involve digitizing traditionally illiquid assets such as real estate, bonds, or commodities and issuing them as blockchain-based tokens. These tokens allow investors worldwide to access, trade, and derive yield from assets that were once inaccessible or difficult to liquidate. By tokenizing RWAs, capital flows can be diversified across global markets. For example, a real estate investment in Europe or Asia can be tokenized and made available to DeFi participants worldwide. This opens up new investment opportunities for global capital and reduces reliance on traditional U.S. financial products. As more assets are tokenized, the global reach of DeFi will expand, offering alternatives to U.S.-based assets and further integrating emerging markets into the global financial system. 4. The impact of regulation. A critical factor in the future of capital flows between the U.S., DeFi, and emerging markets is regulation. The regulation of stablecoins and RWAs in the U.S. will play a significant role in shaping investor confidence and liquidity flows. Clear regulations could bring in more institutional investors and increase the legitimacy of tokenized assets. However, delays or restrictions in U.S. regulation might push capital toward more favorable jurisdictions. At the same time, Global regulation will determine the success of tokenized assets in emerging markets. For countries that are able to draft clear and favorable regulations around RWAs and stablecoins, there will be an opportunity to attract significant global capital. Jurisdictions that create certainty for investors and ensure liquidity for RWAs are likely to capture a growing share of global capital flows, particularly as yield-driven investors seek alternatives to U.S. assets. 5. The future of global capital allocation. At the core of these shifting capital flows is the global chase for yield. Whether it is yield generated in DeFi ecosystems, U.S. TradFi markets, or emerging market economies, capital will always move where it can secure the best returns. DeFi simplifies this process by making it easier for new entrants to set up and compete, using tokenized USD as collateral and providing greater access to yield-bearing assets. As DeFi continues to develop, the playing field between traditional finance and decentralized systems will become more level. Capital will flow more freely into the ecosystems that offer the highest and most stable yields, supported by clear regulation and efficient market access. The future of global capital allocation will likely be driven by a mix of DeFi, RWAs, and stablecoins, each playing a role in optimizing yield and providing liquidity to global investors. Conclusion. In conclusion, the dominance of U.S. financial markets is increasingly being challenged by the growth of DeFi and the tokenization of real-world assets. While USD-denominated stablecoins currently serve as the bridge between global capital and DeFi, the regulatory landscape and the chase for yield will determine how these trends evolve. As emerging markets strengthen their financial infrastructure and issue favorable regulations, they are likely to capture a growing share of global investable capital, creating a more diversified and interconnected financial system.